Elsa, you have a unique window into Brussels right now. Are the actions of Brussels separate and discrete from euro movement, or do they actually move euro dollar in the coming weeks and months?
So actually in the coming weeks, I'd be much more focused on the other side of the Atlantic. And specifically, we know that mid-February is the deadline for the Department of Commerce to issue its report on autos, Section 232 investigation. I think it's something that a few people have been paying attention to, but it's certainly a risk when it comes to euro dollar. We've been trading in a relatively tight range, but I do think eventually we'll get a break to the downside.
What is your, well, you're looking for euro weakness then. Give me a target, because you've been really bold on some of your targets this year.
So I've got 110 penciled in, which would be a new low for euro dollar. I've had that view since last year. It's not some kind of recent development. Certainly the European data has been helping, but it's really just a little bit lower from where we are here.
Okay, but there's not a catalyst.
I think it's a number of things all contributing. You know, if you look at the way markets have been trading since the start of the year, it's been a relatively good environment for carry-in, for EM trades. A lot of people are defaulting to using the dollar as a funding currency for those trades. And I think we should be thinking a little bit more selectively about how we fund those trades. And certainly the euro is a top choice.
Okay, so are we too pessimistic about euro in general?
You know, too pessimistic. There have been a lot of one-off factors, let's say, and we're still hoping that as we get into the second half of the year, a lot of those factors will dissipate. But certainly that doesn't mean that I'm in the bullish consensus camp of calling euro dollar at 120. So I've got 116 for year end, which is a more modest target.
Okay, Dan, how do you see this playing out? What kind of euro level do European exporters actually need?
I guess it would be not only a question of what the euro level is, but as much what's happening with tariffs and what's happening with emerging market demand. I think at this point, certainly we've seen the drag on exports from I guess, what's happened with the euro over the last couple of years, but I think it's been much more about the dynamic in terms of emerging markets and U.S. demand as well as opposed to the currency.
Also, within euro, and I guess we go to sterling, it's either look at euro sterling or look at sterling dollar. Which is most informative to you?
Euro sterling is probably an easier way to try and trade it if you do have to trade sterling. A lot of clients that we speak to just prefer to avoid it altogether. Yeah. But certainly euro sterling, you know, if you want to kind of pick the range and be selling the highs, buying the lows, just playing that pessimism, optimism, that's where I'd look. Cable is a lot tougher because it's polluted by general dollar direction.
Well, this is really good on a Friday then, because a lot tougher to me is range bound. Every single chart, I mean, the dollar ambiguity we talked to Mr. Morris about earlier, I mean, every single chart gives me a range bound feel. Do people like you then take a 4-week holiday, or is this an opportunity to go directional at some point?
There are some interesting trades out there. You know, one of the best calls from our LATAM strategists has actually been short Brazil MEX. A lot of the market is very built up on Brazil. We're much more in a bearish camp. You know, there are some interesting trades in emerging markets. G10 perhaps a little bit tougher. We've still got a longer term bias higher in dollar yen, which is quite unusual. A lot of people I speak to are the other way. But certainly G10 perhaps isn't quite as exciting as EM at the moment.